Our next guest warns the market is mispricing Fed policy. Rebecca Patterson is a former chief investment strategist at hedge fund Bridgewater Associates. Rebecca joins us here on set. Of course, she's been in the Fast Money family for a very long time, so we welcome you back. Great to have you here in person.
Great to be here.
What is the market mispricing at this point? I mean, the fact that we're rallying into this Fed meeting?
Well, I think the whole desk, you all covered it really well already, and Rick did as well, that tomorrow, who knows? We can make educated guesses. Do they go 25? Do they pause? How did the language go? But the bigger deal, the bigger issue for investors are these rate cuts getting priced in later this year and a pretty rapid pace. And, you know, in 1987 and 1998, we saw that sort of quick pivot to easing. But back then, the Fed didn't have the toolkit it has today, and it didn't have the inflation problem it has today. So for the market to be right on rates and the Fed to pivot that fast, I think you all said it really well. We're either going to have to see a lot more financial stability, or instability, which obviously is bad for stocks, or the economy is going to have to slow so quickly that it brings inflation down close or below target in months, which, I mean, given that core CPI is still 5.5%, wages are still growing 6%, again, it's going to be really bad for earnings. So I don't see a scenario where rates are right and equities are right.
Once upon a time, and I think this was like 2 times ago, when the markets were pricing in a cut at the end of the year, and this is before they bumped it to next year and then bumped it back to this year, he actually guided and said, I don't see that happening in the back half of the year. And I wonder, you know, is he going to go out on a limb and actually try to manage that market expectation now? I mean, that would be an interesting market reaction to see.
Yeah, I mean, there's going to be the inter-day trading that we get tomorrow and probably the day after as people parse the press conference and the dot plots and the new forecasts that come out. But again, I think if you're trading the intraday, you've got to focus on that. If you're looking out over the next 3 to 6 months, to me, this is very easy. It's not confusing. You lean into rallies and sell them.
Because credit is going to tighten for sure.
Credit's tightening for sure. Companies are going to get more cautious. We are going to see jobless claims starting to inch higher. Inflation will come down, but not fast enough for the Fed to ease.
Yeah, I agree, Rebecca. I mean, I think, you know, if the market is pricing in cuts in June, and Powell wants, you know, the market to believe that he's nowhere near cuts, right? It does offer a bit of a communication challenge, though, for him, doesn't it? I mean, how do you think the press conference is going to go? Is he going to do the dovish hike? Could he do a hawkish pause and get the same effect?
He could do either, and I'm sure that's something they've been debating for the last few days and probably today. And both have pros and cons, right? If you pause, you could freak people out. That's my technical term, that you know something they don't. You could cause the market to rally, financial conditions ease. That goes against their goal. If you hike but try to have dovish language, but people focus on the hike, maybe that exacerbates some of the instability that's still percolating, even if it's calmed down today. So there is no easy decision tomorrow. This you might have said this is the most important meeting. I don't know if it's the most important. It's definitely the hardest one the Fed's faced in this cycle.
So the biggest opportunity for a misstep. I mean, I think hardest equals biggest opportunity for a misstep. I'm curious, Rebecca, in terms of mispricing, I mean, the markets aren't a monolith. So which areas of the market do you think are mispricing the Fed the most?
Well, rates directly, certainly. But if you're going to think about, well, what do I want to own in this environment? Where are the places to hide or where are the opportunities? And you all are going to be much better than I ever am at the single securities. But I would want to make sure that I'm covered for my base case, which is a recession starting later this year and rates staying higher for longer. So I would be nervous about having too much tech or growth stocks that are more liquidity sensitive. I think they're vulnerable, not just because of the valuations. I would want to have some exposure to some good old-fashioned basic defensives, things like healthcare and utilities. Gold has rallied. Now, Bitcoin, different story. We'll talk about that next time I come on. But I would want to have some gold. I would not want to have some Bitcoin right here because it's fintech. And at the end of the day, if we're looking at liquidity to tighten, that's going to be hit by that, just like the tech stocks.
Rebecca, it's always great to have you here on set with us.
Great to be with you.
Anytime.
Thank
Rebecca
you.
Patterson. Guy, do you like Rebecca's playbook?
Gold for sure. I mean, I'll say this. There might be a lot of people out there that are bullish gold, and this is not meant to be nuanced. I don't think the market is long of gold, to use an old term from the old days. And when the market does get long, it's not going to be from these levels. It's going to be from significantly higher when all the systems finally kick in. So I'm with RP for sure, and I will echo what you said. It is wonderful having her back.
It is excellent having her back. I'd just say this, that she just mentioned staples, the defensives, utilities, healthcare. You see how poorly they acted today? I mean, literally, they were being thrown out. I mean, so it's kind of interesting when you think about how the market closed the day. It just surged. It feels very, very speculative right here. And that just doesn't seem to be pricing for all the inputs that she just gave us of what's not being priced in right here. I just think that the stuff that the people are watching here right now, I mean, like this late day rally, just to me, just feels really unnatural. I really do feel like the higher we go is the harder we could fall, especially if some of the banking stuff picks up again.